Hi everyone. So let us discuss about Finance Commission. There are two videos. In the first, we are going to look at Finance Commission. In the second, we are going to look at the 15th Finance Commission. So let's start. When we look at Finance Commission, so it is constituted by the President every 5 years under Article 280 of the Constitution. This says that Article 280 of the Indian Constitution states that the President of India has to constitute Finance Commission every 5 years. The chairman and the members of Finance Commission are appointed by the President. Thus, Finance Commission consists of one chairman and four members. The Finance Commission is a constitutional body and has a power of civil court. It determines the formula for distribution of taxes between center and states and between states. So it gives recommendation for horizontal distribution and vertical distribution of center's revenue, which is center's net tax revenue. It also determines the share of taxes and grants which is to be given to the local government, the local bodies in the states, and this is known as Finance Commission grant. So if you get a question regarding what a Finance Commission grant, you have to tick that option that where it is written that the Finance Commission grants are the taxes and grants which are given to the local bodies in states. The recommendation of the Finance Commissions are not binding, but they are advisory in nature and they are laid in both the houses of Parliament by the President. Thus, the report is submitted to the President and President laid these reports in the Parliament. Now, you have to remember the name of the chairman who headed the Finance Commission. The 15th Finance Commission is headed by N.K. Singh. The 14th Finance Commission was headed by Y.V. Reddy. And the first Finance Commission was set up in 1951 under the chairmanship of K.C. Nyogi. One thing for clarity is that the Finance Commission, the 15th Finance Commission will submit the report for a period of 6 years instead of period of 5 years. Because of the COVID outbreak, the term was extended by one more year, and so the Finance Commission submitted an interim report for the period FY 2020-21. The 12th Finance Commission was headed by C. Rangarajan, who was also the Governor of Reserve Bank of India. The 13th Finance Commission was headed by Dr. Vijay L. Kelkar. The 2nd Finance Commission was headed by K. Santhanam, and the 6th Finance Commission was headed by K. Brahmananda Reddy. You should remember these few names and who chaired these Finance Commission, because in case if you get a question like if you have to choose like who headed which Finance Commission, by remembering a few names, it will be easy for you to get to the correct option. As I said that the Finance Commission gives the formula for vertical and horizontal devolution, we will look at both of them. With respect to vertical devolution, the distribution of net proceeds of taxes of the union between union and state government. The vertical devolution talks about the distribution of net proceeds of taxes of the union government between the union and state government. The 14th Finance Commission increased the vertical devolution to 42%. Earlier it was 32%, it was increased to 42%, thus there was a 10% increase. And this was a major increase by the Finance Commission with respect to the share of tax proceeds of the state government in the union government. The 15th Finance Commission reduced it to 41% because of the creation of two new union territories of Jammu and Kashmir and Ladakh. Now we will look at the functions of the Finance Commission. Here we are going to look at the common functions which are usually performed by the Finance Commission, because in the next few minutes we are going to look at the terms of reference which are specific to a particular Finance Commission. The main functions of Finance Commission is to determine the net tax proceeds distribution or the distribution of net tax proceeds between the union government, between the center and the state government. The principles which should govern the grant in aid of the revenues to the state government out of the consolidated fund of India. So what should be the principle which should govern the grant in aid which is given to the state government by the central government from the consolidated fund of India? The measures which are needed to be taken to augment the consolidated fund of the states to supplement the resources of the local bodies like the panchayats and the municipalities, and to study the impact of the enhanced devolution following the 14th Finance Commission, because 14th Finance Commission increased the devolution to 42%. The recommendations, as I said, are advisory in nature. Thus, the central government may or may not accept all the recommendation of the Finance Commission. Thus, the Finance Commission recommendation are not binding, and it is up to the government whether to implement it or not. But most of the time, the recommendations do get implemented. Now, we will look at the terms of reference of the 15th Finance Commission. The President has laid down the terms of reference, which means that the Finance Commission will have to study so and so things which I mentioned. First is, the Commission shall review the current fiscal status of the Union Government and the State Government and to recommend the fiscal consolidation roadmap. Second is, the Commission should examine whether revenue deficit grants should be given to the state government by the central government at all. Because we do know that revenue deficit grant is provided. Revenue deficit means when revenue falls short of the expenses. So when your revenue is less and expenses are more. So in that case, the central government do provide grants. So the question was whether central government should continue to provide such grants. Third was the impact of goods and service tax or the GST and the compensation for the losses owing to GST. So to study the GST and what were the impacts, and to create a framework wherein performance-based incentives can be given to the states. This is an interesting thing. So the performance-based incentive can be given to the states in various categories, like whether the state is successful in expanding the tax base, both direct and indirect taxes, then the implementation of the flagship scheme of the central government, to promote digital economy, progress in achieving progress in ease of doing business, then the population control measure, progress in sustainable development, etc. So based on these indicators, performance-based incentive will be given to states. Now we will look at few practice questions. Question first, which of the following article talks about the formation of Finance Commission? Here the correct is option A. Article 280 of the Indian Constitution says that the President of India will constitute a Finance Commission every 5 years. And the current Finance Commission is the 15th Finance Commission, and the first Finance Commission was formed in the year 1951. Question second, consider the following statements with regard to Finance Commission. Option first, the recommendation of the Finance Commission covers a period of 5 years. The report is submitted to the Prime Minister of India. You have to select out of these two options which is correct or whether both are correct. Here only option first is correct, option 2 is wrong, because the report is submitted to the President and the President lays down this report in the Parliament or in the both houses of Parliament. And I have said that the Commission covers a period of 5 years because Article 280 says that every 5 years a Finance Commission will be constituted. But the 15th Finance Commission, it has a tenure of 6 years because of the COVID outbreak. Thank you.